momentum, 166 points higher. That's what Dow futures are doing. So all looking good as far as global markets are concerned. Where does that leave us? And can this rally continue? Well, let's put that question to Jay Bala of cashthechaos.com. Jay, thanks for joining in. Now, your view has been well documented. I was hearing you actually, I think just the other day or yesterday as well. And you were saying that, we can get a bit of a, relief rally, these short pauses, but you're still looking at the possibility of more downsides and a breach of that September low, 16,850. So you're still retaining that view? Or do you think there's a case where things can turn?
Yeah, thanks for having me on the show, Surbi. See, the markets have come to the very key level of 16,747, which is the September low of last year. I pointed this out that market could see a relief rally close to these levels, and the markets are doing that. And the markets are firmly engaged in a downtrend. And we could see the Nifty bump up somewhere close to 7,300, 7,400. Things wouldn't change much, but there's a gap that's left on the 10th of March and 13th of March. And there's a gap on the downsides between left on the 20th of July. So that's about 16,400. So as they say in London, mind the gap.
All right. What about banks? Today, banks, of course, are doing well, but you anticipate banks to lead the decline from here on. Take us through your view.
Yeah, see, the banks have just had a breakdown last week, and they are seeing a short-term relief rally, which is in line with price structure. What we have seen a breakdown in RBL Bank and Punjab National Bank, and the heavies are still pending to show further weakness. The bigger ones have just come off the highs. The next leg will be more downsides, which drives the markets lower. So then the break of 16,747, the September low, is going to be most probably driven by the banks, or they'll be major contributor. So watch out for these. So don't get misled by the short-term bump up.
Come on, Jay, don't change your view. We're willing. We've seen a fair. Okay, let me put it another way, right? Let's just approach this from a global point of view. You would agree that lower yields are positive generally for risk assets like equities, Jay? Or you think in this case it's different?
Yeah, it's a very tricky bet to make. I would let the market dictate what it's doing, and we just follow the markets and leave it to the economists to say what it's going to do. But even not just the yields. If you look at gold and silver, they are showing divergent trends. And this looks, from what the market is telling me at this point of time, it looks like gold and dollar could go up together and silver could fall down. And that's a very, precarious situation that can happen only in the case of flight to safety. So there are very divergent things that are happening. So when it comes to yields, even if 330 bips on the US 10 years doesn't hold, I'm expecting 300 bips to hold and then resume the short-term up move. The short-term up could fall short of the 500 bips that I projected a few weeks ago, but the medium-term and long-term remains pretty much intact.
As a technical analyst, Jay, what's your call tomorrow? It's a big day, right, with the Fed decision, etc. What's your own sense? What's likely to happen?
It does look like the Fed could copy what the ECB has done. So we market could get a surprise with half a point bump up, but that's not my forte. I just leave the price action to interpret whatever the market is going to do. But we were talking about banks in the beginning, and you were talking about Credit Suisse and all. I just want to point out here, the next shoe to drop could be Deutsche Bank or Commerce Bank. It need not be tomorrow or day after, but there's a big pattern that's shaping up on Deutsche Bank. So if you want to be forward-looking, look at possible things that could emerge out of Deutsche Bank.
All right. Hi, Jay. Good afternoon. You've been coming on the show for the past couple of months, and you've maintained this cautious view. And it's worked out well. So good on that call on the index itself. But the only problem from a bullish perspective is you're still expecting some more downside out here. So let's see how that plays out. One of the calls that you made, you're mildly bullish on the FMCG space, at least in the near term. Give us a couple of ideas out there. If you could name a couple of stocks with levels that you're looking at.
Yeah, see, the FMCG index is the only index that's probably holding up. Autos and FMCG were the strongest one. Autos have broken down from a double top, but FMCG is holding above 43,000. As long as that index stays above 43,000, there is still, a scope for short-term plays over there. And, ITC probably has got one last high to finish the structure, somewhere close to 400. And there's a tradable opportunity probably in Titan. From extreme short-term perspective, if it holds 2,400, I think it's heading somewhere close to 2,650, 2,700. But I don't think fresh record highs are coming there. And Marico, it's still trending down. But if it sees a reversal tomorrow or day after, there's a probability that it's seen a short-term selling exhaustion.
Jay, the thing with your views is that they can rarely be forgotten. Commerce Bank and Deutsche Bank. I'm going to remember that. It'll sit in my head through the whole evening till I can digest it. But anyway, very interesting call there. I want to come back to the home market here and talk about Reliance. Now, given your overall bearish call, I don't know if you're making much of today's move. There's a lot of fundamental talk. There are targets around 3,000 odd on the fundamental side. But what are the charts saying on Reliance?
See, price is the best fundamental analyst, Surabhi. It's very difficult for people to come to that kind of conclusion. But you have to let go and understand whatever the market is saying. You got to completely agree to it, and it comes with a number of years of experience. And when it comes to Reliance, I pointed out a breakdown from a head and shoulder top for Reliance. So whatever we are seeing now, to me, it looks like just a short-term move. I don't think Reliance is going to rally much beyond 2,350, 2,400. But all it has to do is just keep from not going up. That will put pressure on the market. And, 2180 is absolutely critical for Reliance. If 2180 breaks, it's got 10% downside from there.
But you don't see a reversal. I mean, today's move doesn't move the needle at all for you on the upside.
No, it doesn't. And in fact, it looks like it's pretty much within the script of what is expected of Reliance. I think it'll struggle somewhere close to 2350, 2400. Watch for it. If it does take out, then we can probably reassess that.
But your base case is that it takes out 2180 and heads lower, right?
Yeah, that's right. And when it comes to Reliance, I'm always excessively cautious when it comes to the bearish side. But the market setup is saying that it's headed down, and it's better not to be long. But you can take short positions as the markets break down on an intraday basis. But rather if you're going to be playing it on a positional basis, I would do it through monthly puts and other synthetic shorts.
Very quickly, Jay, the call on crude prices?
Yeah, crude is heading somewhere close to 65 probably next week itself. And from there, I see a bump up for crude, somewhere close to 78. This is the Brent parity I'm talking about, somewhere close to 78. And then a very sharp low closer to the mid 40s to late 40s. That's the working thesis for me for Brent.
Okay, Jay, thank you very much. Good conversation as always. Appreciate you joining in.